Hey traders, checking into the stock market today. Big tech bulls came out swinging, leading the way. We also saw some rotation going on. Let's check in where we stand to start the week. Before we hit the charts, we've got another free ebook, 4 exit strategies and some details on them. Click the link in the description or the comments of this video. It's free. S&P 500 daily bull flag on the table, EMA 12 support. So what the start of this week has done is something very good for clarity. It's given us a clear level to be going off of on daily timeframes from a swing trading perspective to say, if the low of Friday does not break, the bulls keep complete control. It's a very clear line in the sand, and there is no, I think I'm bearish, I think I'm bullish. For me, I am bullish as long as that level is holding. Break that level, okay, I will start to consider otherwise. But that is my line in the sand. The bears must break that level to prove anything to me. So for SPY, that low of Friday is down at 449.14. And it's possible, looking at the futures chart, that we trade within a tightening range now. You know, we don't have to go straight up to a new higher high on the daily. This is the 12-hour perspective, and a possibility would be a 12-hour lower high, and then a higher low, and a tightening range to start this week. That's one possibility. There's only 3 possibilities as to what can happen. That's one of them. The other is the bull break to a higher high. And the other is a failure to confirm the daily bull flag and bears prove something on the daily chart by breaking the low of Friday. So those are the 3 scenarios. I will be bullish until the low of Friday breaks. So that's what we got in the S&P 500. And the NASDAQ is the same thing, but stronger, closer to breaking resistance, closer to confirming a daily bull flag. And we can see that resistance level of 15,261 is also a double top. So if that level breaks, it's more conviction as far as getting us to the highest levels in multiple months and bulls keeping their complete control. So for QQQ, that level for complete bull control is 358.59. And the bull flag is going to test resistance 371.83. We are about 0.6, 0.7% from that level. So it was clearly big tech's bull show today. And again, I love it because we have these levels now. Before today, we just had this move up. Where is our support? We didn't establish much on the way up. Where's the clarity? Now we've got the clarity. Look at Apple. Daily bull flag attempt. If it confirms, all-time highs are next as far as the next target. Google, daily bull flag, currently a little double top. Amazon daily bull flag attempt, Netflix testing its highs, not the same kind of bull flag setup. Facebook daily bull flag confirmed, still in that swing position or the remaining swing position. I did take some profit on the way up, but what I've got left now, I'm watching weekly EMA 12 and I'm watching the gap fill 235, 248, and then there's a whole lot of space up there. So again, I'm deciding on a daily basis how long I'm going to hold Facebook. I know I want to hold my Tesla swing for all-time highs, but I'm not going to hope for all-time highs on Facebook. I'm not going to sit through weekly consolidation in this position. So it's just a question of where am I going to look to take some profit? But new benchmark, I can just walk up my stop. I will exit if 222 breaks and just keep walking it up every time we set a new daily high or low. But the point is, we now have these daily support levels for all these big tech names, and that is my guide going forward as far as this strength. Semiconductors have been weaker than tech, daily inside bar today. Names like this have to be cautious of a daily lower high being the result of the next bounce. Because after such a bullish day today with QQQ, we are still over 5% from the recent highs. So we could go another 1.5% tomorrow and then another 1.5% on Wednesday and still be shaping up for a daily lower high to be possible. So bulls have to be cautious because if we do confirm a daily downtrend, weekly consolidation is then clearly underway. And then that's when we're watching for the potential inverse head and shoulders on the weekly. But for now, inside bar for tomorrow, if it breaks bull, we keep an eye on the hourly uptrend, keeping an eye out for anything under 284.42 to be a daily lower high. And that's the case for NVDA and names in the sector. Tesla daily bull flag confirmed. We knew it was a bull flag. It was the strongest daily bull flag out there in the market. And this one was fairly simple, just as far as, it's not easy to say, okay, our low is set. As soon as we broke the high of yesterday, the volume poured in. We actually had a bearish correlation to start the morning with QQQ. We were much weaker than QQQ with a double top at the high of Friday first thing. And then as soon as the high of Friday broke, that's when your bull volume pours in, because as soon as that high of Friday breaks, your probability needle of the daily higher low being set and the bull flag being on the table then increases significantly. And the bull volume poured in once that happened. So new benchmark level, 1066 daily higher low. And as far as resistance, we've got 1170, 1208, and then all-time highs, 1243. We certainly don't have to go straight to all-time highs from here. That would be nice, but tons of space for a weekly higher low. We still haven't seen hourly oversold conditions. It's been so aggressively bought. We've gone over 50% with no hourly oversold, which is fairly astounding. Bulls in complete control. Now the burden is on the bears to prove to us that an all-time high is not coming. This is a strong monthly chart. So a lot of bull momentum, and we'll see if they keep that juice going. A lot of space for an hourly higher low to form, anything above the low of today. And IO bulls stood out today as well. Chinese names had a decent day. It's testing its high, keeping its daily uptrend going. Baba sideways. What other EV names? Plug, big breakout. So EV seeing strength. Solar sector saw strength. I covered that in the pre-market live stream that I did. We knew volatility was coming. The example I gave is look at the 4 days of volume. We will know when there's going to be a volume spike because we'll put in a significant amount of this 4-day volume, which is 700,000 shares a day. We're going to put that in early and we'll know. And so in the first 15 minutes of trading, well, let's use a little bit more than that. The first hour of trading, we had 240,000 shares traded, which was a third. Pretty much in the first 2 hours of trading, we put in almost the 20-day or the last 4 days average. I'm trying to do this math in my head real quick and it's not going well. 1, 2, 3, 4, over 500,000 plus shares when 700,000 was the entirety of the day. So pretty much we doubled the volume from the last 4 days. Bull break, very clear. Daily higher lows maintained. So EV and solar still strong. Healthcare was the weakest major sector today. Does that look like a weak chart to you? It doesn't to me. That's a potential daily bull flag. So rotation is a bull's best friend. The only time we see fear in the market, you've heard me say this before, is when all of our major sectors are hitting lows at the same time. I'm watching for that. If it doesn't happen, again, today was just an ideal day. It just shows breadth in the market where right now, so QQQ, big green day. What if QQQ is red tomorrow and XLV has a green day? Then we'll have bull flags shaping up on both of our major sectors, or at least two of our major sectors, I should say. So daily inside bar on XLV, definitely some downward pressure on the S&P 500 because of XLV weakness. And watching the daily EMA 12 as a guide, anything above 134 will be a higher low. But it's a daily bull flag right now, as long as daily EMA 12 keeps holding as support. So it will be notable when all of our major sectors hit lows at the same time. That will be a red little alert that goes in my brain. Okay, bears are showing me something. Let's see how long they can keep that up. But as long as it's, one really strong sector and then some weak sectors, as long as that goes on, that is bullish in my opinion. XLF has been weaker on the daily time frame. I exited all of my FAZ swing. So initiated a swing on Wednesday, exited half on Friday, exited the second half today. Why? Because I was trimming shorts and increasing, well, I didn't increase my long exposure much, but I decreased my short exposure to give my portfolio that bull lean today. So hourly time frame, bulls need to confirm a trend change back to the bulls. Then we zoom out and scout a daily lower high. And I might look to reshort it again as my hedge because it's weaker. And there's a lot of space for a daily lower high to potentially be the result of the next bounce. But we are scouting a weekly higher low as well. So not going to get too caught up on the daily. Daily is going to scout a daily lower high. The weekly is going to scout a weekly higher low. This is where traders get mixed up, where the most likely scenario is completely opposite on different time frames. A weekly higher low is the most likely. A daily lower high, at least initially, is the most likely next bounce. But keeping an eye out for some rotation to head back into the financial sector. Bulls have to prove it with an hourly trend change. IWM, another name that bulls have to be a bit cautious on, just because the worst case scenario for the bulls would be fail the high and confirm a daily downtrend. So that resistance of 212.25 is still a ways away. 2% plus away, and 205 is key support. So again, got to be cautious. Tomorrow's pretty important for me and IWM, because if we have a red day, that daily downtrend confirming into weekly consolidation will be on the table. Maybe I'll look there to hedge with some bearish position. I'm just scouting for relative weakness. Just show me who on the daily chart is showing relative weakness, because my Facebook and Tesla are doing real well and they're lead bulls. And so I want to protect my lead bulls with some lead bears. So we'll see how IWM and XLF shape up over the next couple of days. Biotech sector, nice laggard move. It broke key resistance and then pulled back pretty hard, but a quick turnaround right back into bullish continuation. So a higher low on the daily is now set, 89.87. Increasing bull volume, close up at the high the last 2 days in a row. And resistance from here is 96.83 and 99.16 is key. 99.16 is the highest level that we have seen in 2.5 months. And getting over that level would be a great sign for bulls. Look at IWM and XBI both grinding daily EMA 12 and holding it. Got to hold that back test, which they did, at least for now. So nice move by the biotech bulls. And again, biotech bulls, every growth name, every laggard is looking at XBI's chart and saying, I hope my chart looks like this. ARKK, decent day, but has to see that higher high. PLTR, bull flag confirmed, just going through a bunch of growth names here. PTON is weaker. What's Roku doing? Daily higher low, but still has to break. So growth, the past couple of weeks, it's been growth in tech on one side and XLV and XLF on the other. And growth and tech have been stronger more often, but there are times where XLV and XLF will be green and growth and tech will be red. So I'm just compartmentalizing those sectors in my brain with those pairings. And today was a good example because XLF and XLV were red and QQQ and growth were green. TLRY, the cannabis space, so gap filled down to 707, daily bounce off EMA 12. Hourly trend change is still needed to the bulls, but trying to shape up here. CGC, sector peer had a strong day. I'm still keeping an eye on this sector for day trading opportunity in both directions. The volatility is certainly there. So we had a 10% range today from the low to the high on CGC. US cannabis, double top on MSOS is a key resistance level now. Bulls must hold 1961 to form a daily higher low. And again, what I'm watching is EMA. EMA, can we back test and hold EMA 12? So far, we've dipped below it, but we keep holding the red EMA 12. Best case for the bulls, hold it again and see continuation if we're going to follow along with what XBI has done. Oil, equilibrium on watch, 2-day time frame. High oil prices is definitely one of the bear narratives as far as fundamentals and recession and all that. So if this were to break bear, oil bulls and fundamental bears might change their tune a little bit, but we're looking for the daily higher low or the 2-day higher low to be set. And then anything under 116.64 would just be a lower high. And I'm watching for the potential that we tighten up within this range into next week before we look for some clarity as far as a break. And if it were to break bear, monthly consolidation would be shaping up. And our top would be in. I mean, this is a pretty important pattern because how this 2-day equilibrium breaks is going to obviously significantly be completely different. We're either going to be right back up testing our highs and oh no, oil's going to 400, or we're going to be seeing monthly consolidation and we're just like that going to be 30% under more than that. We're going to be 40%. If this breaks bear and gets some follow through, we'll be 40% under the high. And we won't revisit that high anytime soon, in my opinion. So this is a very important pattern as far as oil is concerned, and as far as the people that are looking to oil to have fundamental impacts. And uranium CCJ, double top on the daily, rejected the price. I exited all of my CCJ position on Friday after that double top rejection. And now we're scouting a daily high or low, anything above 26.16, watching for hourly oversold conditions. If we get them, I may try one more trade on CCJ. I've had a couple decent swing trades, definitely leaving money on the table, but playing these higher lows. So I may try one more time. Hourly oversold, making a play off of 26.16. We'll see how that shapes up maybe tomorrow. So that's where we stand. Facebook, Tesla, lead bulls, and continuing to just position around. Burden is on bears on tons of daily charts to prove to us that this move is not going to continuously put pressure on fundamental bears that are looking for another leg down to lower lows. We'll take it one day at a time. Wednesday, we got Fed minutes as a potential reaction. But pretty much, can we confirm bull flags on SPY and QQQ is the question for the week, now that we have daily higher lows set on both. Hope you had a good trading day and a good weekend. Check out the free ebook, and I'll see you tomorrow. Do good things. It's time to grow some microgreens. So we've got sunflower seeds, salad mix, broccoli seeds, and peas. And you just throw some dirt in a little tray, put the seeds on top, keep them moist with a little spritzer, and I'm putting them on a heat map inside the sunroom here because it still gets chilly. But an analogy with trading, this is like scalp day trading. Minimal effort, just little quick, give me my gains, thank you very much. Not a whole lot of risk associated with them, but also not a huge amount of returns. If I plant a sunflower and let it grow to maturity, I'm going to get exponential gains where one sunflower seed could give me hundreds of sunflower seeds. But there is also risk associated with that. What if the plant dies 3 months in? Then I don't get anything. So I personally prefer the day trading scalp method for my trading, as there is less risk. I'm in complete control. I'm in the trade for 5-10 minutes. Gains locked in, on to the next one. That's your microgreen stock analogy.